Hey everyone, John Henry here, and today in the market psychology video, man, gold had a lot of fun today. We're going to be talking about gold attempting to get a continuation after this massive gap higher, and then they didn't do so well afterward, right? So we have this huge gap up from yesterday, massive movement to the upside. The overnight session had a ton of fun, and with this big move up, initially you're definitely thinking, especially with the first candle of the day looking like this, that the buyers are going to try to continue it, right? So it's an aggressive one because you're buying the very first candle of the day, but there's enough information here given the context to be looking for the buyers to just say, you know what, look at this thing. Why wouldn't I buy more? It just makes sense. Even if it pulls back, I'm probably just going to buy more underneath too, right? So the buyers, we know that they are going to aggressively attack this, especially with the first candle of the day. So I do like this as an aggressive first attempt on the day. Now, when things start getting a little bit shady, right? We get a bunch of wick on the highs. Okay, they still close bullish. Maybe they're just kind of pausing a little bit. It could just be a probe. They're checking the highs to see what they want to do there and pulls back and they slam it back up for a breakout move. But then they followed up with weakness into a pullback. Okay, it might just be a pullback for the buyers to take over. Yep, and look at that bullish strength. Perfect. So the buyers are definitely coming in again. So people will buy that. And then they get that follow through. And then it goes a little bit bearish, but then the bears don't get much follow through. Bulls come in strong, but then they get a doji. You're not getting that consecutive movement that either side really wants to see. This looks more like a range. People are buying low and selling high, and they're not looking to buy high and sell it when it goes higher. They're doing the opposite of that. So that has to shift our sentiment a little bit. You begin looking at this in a sense of a range. Okay, well, if they're going to act like a range, then we're going to buy low and we're going to sell high, and then we'll go from there. But then this big bad boy shows up, right? This is actually the trade of the day on this candle, so make sure to watch that. But this huge bear breakout completely shatters any trend that they had going on. And even then, there will be buyers that buy underneath it looking for a quick snap higher again. But with this kind of candle closing on its lows very aggressively in the context of the buyers completely falling apart at the highs up here, there's not really much semblance to be a buyer down there. So when that big slam lower, that is an obvious sell signal. The bears are taking over heavy control to try to drive the market lower. So a beautiful swing sell, trying to hang on to it for a decent amount of the morning. They push down, they hit monthly support right here, catch a little bit of a bounce higher, but they couldn't even go, halfway into that bear breakout candle before turning back down again. Another nice follow-up entry. If you didn't want to sell underneath this big one right here, that was a nice follow-up entry, or you could have taken both for a move down. Gorgeous breakout movement. It looks like a lot of folks waited for this one right here, weren't so sure on that one. Then it comes in and breaks down again. Another big breakout candle back underneath those lows. So we're seeing consecutive breakouts. Every time they go to the lows, the buyers who were likely trying to fade the lows were wrong, and they get whipped out, and sellers are selling into them. And we're getting this driving force now slamming the market down. But the issue is now we start forming a little bit of a trend line bottom here, a little bit of a wedge off of the highs, a descending wedge working its way lower, and we start breaking out of the bottom of a descending wedge. Now, I'm sure you've heard me say this before. I feel like a broken record sometimes talking about it, but descending wedges breaking lower, not very likely going to hold. It's very unlikely in terms of probability that you get a bear anything that breaks lower to actually stick around and hold and maintain that strength. It's exhausting, right? The sellers have to put up a lot of strength to keep that going. So knowing that information, we get another big spike down, but this time, just like we saw back here, we have a little bit more of a reason to not believe them and buy into it for a quick scalp right back up again. And that's all you're looking for. You're not looking for a huge reversal because you're probably not going to get it, but you are looking for a quick bounce, knowing that we're getting way exhausted at the bottom and they're going to need to correct. So buying down here, it is aggressive, but I definitely think that it is a nice area of interest. Buyers start stepping up, we start hitting the profit targets up there, and we start seeing some weakness into a massive bear breakout candle once again, giving us a clue that if you are still long, if you haven't taken your scalp targets, you might want to get out because this thing is about to go through the floor, and that is a beautiful sell signal to drive the market one more time to the downside, hit the prior high of day, and found an immense amount of support there. Now, does that mean that the sellers are done? No, definitely not. They could drop another 100 points from here. The important thing is making sure that you're sticking with and figuring out and realizing what's happening in the markets. If the markets aren't doing what they should be doing, i.e. a trend not giving you trend entries, then you probably have to shift the way that you look at it. And you start having to look at it as maybe it's a range, buy low, sell high, and then it breaks out into a trend. Okay, well, obviously the range broke down, so now we're looking for trend trading again. So you have to make sure to be fluid. You have to work with the markets, and they will definitely work with you as long as you're willing to listen to them. So a beautiful move down, gorgeous example of a combination of market psychology as well as technical analysis. Hopefully you learned something, hopefully you found it interesting, and we'll see you next time.